take the money they have and run, especially with yields on 10-year bonds still well below 2%. Let's get right to the floor show. Bring in the traders at the New York Stock Exchange, CME Group and the NYMEX. Okay, John Corpina, take a crack at this. Why are we now up 34 points when we had been up 60? Is this just sort of, let's take our profits and run?
Yeah, there's still time left to go in this day, and obviously we're all talking about how this market is moving higher and where we're going to close. Let's just not forget a few things. End of the month here, so we have seen some window dressing yesterday, today, and yesterday coming into today. We've got a Russell rebalance, not a big one, but yes, that plays into our tape here. So there are a couple of factors here that are helping our market move higher and higher.
Okay, so wait, let me just jump in here. Russell rebalance, and you've got, of course, as you call it, the window dressing. That's where fund managers on the last day of a month have to tweak their funds, right? I mean, they want to make it look like they've made a lot of money here.
Right. They want to boost it up as much as they can because at the end of the day, these statements are getting printed out and sent to all their investors, and they want to be able to look down and say, look, this is my percentage return on the month, and that's how they get compensated. So that is window dressing there, but let's not forget the true fundamentals that are here. Economic data is supporting this rally that we have seen. News coming out of Washington is helping. Earnings season that we got through is helping. So on a whole, yes, this rally should be here. But to get to your lead in here, should investors be buying stocks with two fists? I don't think so just yet, because I didn't see them selling it hard when we had that downturn in the market those past two sessions, and I'm not seeing them buying back as hard right now.
Okay.
I think investors are still watching and waiting.
Okay, let me just bring in Charlie Nedos, because I'm pulling up treasuries, and the 10-year yield at this point at about 1.89%. Are we seeing once again some kind of bizarre flight to quality here? It looks like there's some fear in the market, yet I still see the VIX down.
Look at the dollar as well, and that's what I'm looking at the charts. I'm looking at the S&P chart. I'm looking at a bond chart, and I'm looking at a dollar chart and saying something has to give. And, you know, again, I think the bond traders got it right here. I think the equities are getting a little frothy. I guess the only thing that I haven't seen that would confirm any type, again, I haven't seen any type of a sell signal, but what would confirm a sell signal to me, Liz, is if you start to see the public participating. Because that's really the thing that's been absent, is the retail investor.
Do you think,
they tend to
Charlie,
come in.
do you think that the credit markets are smarter than the equity markets, at the risk of annoying John Corpina?
Yes, I do. I just think that there's more funds involved in those markets. I think there's it's a broader-based market. It's a bigger market as a whole.
Corpina, what do you say to that?
You know, he might be right there, because just look at the investing pool that's there. From the retail investor, they get emotional and they get tied up in stuff. So there could be artificial movements into our markets here that you would not particularly see in the credit market. Go to Main Street, you ask somebody who owns stocks, they'll say, most of them will say yes. Ask them if they're involved in the credit trading, they probably won't know what you're talking about.
Well, you know, I definitely see what you mean by that. Now let's go to the NYMEX, because Jonathan Najat is there, and we're looking at behavior. As Charlie mentioned, you've got to always bring in what's happening with the dollar as it pertains to the energy complex. Is that what you're focusing on?
Yeah, I also think there's a lot of cleanup going on right now, and I'm not seeing a whole lot of new money coming in just yet. I think there's a lot of people still sitting on the sideline waiting till tomorrow. But we did move lower with equities, which kind of indicates to me a little bit more that, you know, crude's going to start following equities again in the future.
Well, what's going to make that happen? We're down 1% here on a day where equities are moving higher.
Well, they moved kind of in sync at the end. I think crude's problem right now is that they're dealing with excess storage for the most part, and that's kind of weighing. And we're kind of at this point right now where we're dealing, you know, do we look at storage more, or do we look at the equities and the potential for growth in the economy? So I think going to equities is probably bullish for crude if we start to see them go back in line together.
I hear you. I see what you're saying. But guys, look, go ahead.
No, I was going to say, well, look at gas prices, Liz. Look. There's a disconnect there where gas prices are high, crude's low. These guys are making money.
Moving higher I see RBOB moving higher by about 2% there. So today we're seeing that change, at least in the behavior.
If you're getting paid to do nothing, you do nothing.
Yeah, I know. I mean, except that it's one day up, one day down. That's the thing. It's a very, very tricky market, and I'd like to always keep our investor viewers apprised of every single move. In fact, George Giro talking about gold, he said, oh, you missed the short squeeze. It was Tuesday. And then yet we start to see a drop a little bit here today. So it's just something where you really have to be fleet-footed. And gentlemen, thank you for being fleet-footed. We appreciate it.
Thank you.
No Achilles, though. No Achilles tendon problems there. Thank you very much. Closing bell ringing in about 50.